Indian rupee going forward and its impact on macro fundamentals with Siddhartha Sanyal, Chief India Economist at Barclays. Hi Siddharth, good afternoon to you and thanks a lot for joining us today on Bloomberg Quint. Do you see the downward trajectory of the Indian rupee that we've seen? It's hit fresh lows in today's session, hitting that mark of 70. Will this continue considering the sort of rout which we've seen in the currency market, in the emerging market basket?
Well, at the moment, the last 1 or 2 days move had been impacted or influenced very heavily by global factors, particularly the development on some of the other emerging economies like Turkey. But in general, also we, from a broader macro point of view, we had been a lot more cautious on the rupee in the recent past. So we maintain the view that given the oil prices where they're hovering at the moment over the last few months, we do expect the current account deficit in this particular financial year to be around 2.6% of GDP for India, which is to the north of $70 billion for the full year. And the funding from FDI is just about half of that. So a sizable chunk of the current account gap needs to be funded from FII flows. And this kind of development creates a lot of uncertainty about FII flows into emerging markets. So this creates some kind of additional pressure on rupee. So we had been maintaining for a while that by the end of the year, rupee might reach something close to 72, and we don't see any quick change in that particular view.
Okay, so Siddharth, good afternoon. What are those important factors that you would watch out for from a macro standpoint at this point in time that could likely lead the rupee lower than 72 and perhaps even 73, 74?
So we are not talking about that kind of a level just now because as of now there had been some bit of uncertainty, quite a sharp escalation of uncertainty in the global arena, particularly in case of certain emerging markets. But as I mentioned, there are certain factors like the current account gap, etc., which is playing against the rupee and Indian external sector in general. But of late, we have seen some improvement on a few factors like softening in the inflation trajectory, and possibly we have seen a bit of proactive set of measures on the part of the Reserve Bank and monetary policy side. So we think at the moment we are comfortable talking about a little more depreciation over the course of the next few months, but not necessarily very sharp, severe depreciation. So compared to some of the other emerging markets, if oil prices stabilize where they are at the moment, we might actually see rupee behaving a little better than some of the other emerging currencies potentially.
And Siddharth, how would you anticipate the Reserve Banks of India's position at this point in time? What do you think they are thinking there right now?
So our sense is that after the 2 consecutive hikes on the monetary policy side in the earlier part of the summer, now ideally they would like to wait and watch for a while just to try to assess the impact of these 2 hikes on the economy, including on financial markets. So our sense is that the kind of trajectory on inflation we are anticipating going ahead over the next say 6 odd months, and given the fact that growth recovery is still at a nascent stage, we think RBI had actually front-loaded a bit of their hikes. So in the ideal situation, without any severe disruption from external front, our sense is that the RBI will actually prefer to go little. The hiking path will rather be calibrated rather than too aggressive at this juncture. And our sense is that after these 2 hikes, they will actually go slow and stay on hold ideally for a while. Now, the new angle here is how the financial markets across various emerging markets and flows into various emerging markets pan out over the course of the next few weeks. They will definitely be watchful, but our baseline scenario is that of a hold for a while now.
Siddharth, you mentioned about the flows, so just wanted to know, what are you making of the FDI flows, A, in India, and second, in the Asian markets?
Well, FDI flows more than at a regional level. You have to see more in the context of one particular country and economy and their policies. So over the last few years, we have actually made significant progress towards a more open FDI policy in a very calibrated fashion. And my sense is that over a period of time, you will definitely see benefit of that. Overall, the economy is not moving in the right direction. So overall, you will be seeing a very significant improvement in the FDI picture and FDI sentiment over a period of time. Having said that, this is the election year. You will have a number of state level elections followed by a national election over the course of the next 8 to 10 months. And at that point of time, some of the investors might actually try to go slightly slow, but broadly I would tend to maintain generally a positive sentiment on FDI if I take a slightly medium-term view.
Siddhartha Sanyal, thank you so much for joining us and taking us through your view of the rupee as well as the current various macros that may impact the rupee going forward. Thank you so much for joining us.
Always a pleasure.